Hello, good afternoon. Happy Friday, TGIF, right? What an amazing week the market has provided to us in the last 2 days. If you guys are new to following me, you can find me on YouTube, on LinkedIn, Instagram, Twitter, and Facebook as well. So check it all out there. And I just want to give you guys a little quick disclaimer. I did have my Series 7 back in 2000 and it is no longer current. So please do your own due diligence and trade with proper risk management. No results are guaranteed and there are varying degrees of risk with all sorts of trading instruments. All right, all that being said, you guys know we always start off with the SPY analysis. So we've got the SPY up right here, right? We've had this channel that was developed for about 3 weeks, right? Right here. So we had this channel that was developed over 3 weeks time and we blew above it, right? We came up here and then for 4 days, we sort of had a little island up here off in the Bahamas having fun. And guess what? Everybody left and came home. They came back and dropped the market back down to that 200 simple moving average right here. And today we tested it again. We tested the close of yesterday almost. So seeing that right now we do have an inside day that is happening and the volume was definitely massive, massive yesterday. You know, sometimes we've noticed when I do this at 12:45 that we have crazy volume at 12:45. So let's just look and see, hey, are we above or below that volume right now for our 12:45 time frame? Right now, 12:45, the biggest volume that we had was roughly back here around 12:30, and we're definitely below that. And right now we're starting to pull back down. Now let's go back to that daily chart. I would have two side by side, but it does tend to eat up a lot of bandwidth. So I don't want any delays for you guys. And let's go ahead and put it on a 45-minute chart. I really like the 45-minute chart as well. So you can also see, hey, I drew this trend line yesterday from the candlesticks on the 45-minute chart. And look at that, how it also respected it today. And we're starting to pull back down. We have a bit of a descending wedge. So let's go ahead and draw it right here, right? We've got this as our baseline right here. And then we've got the wedge going down for today, right? So as long as we're going to respect that downward motion, the yellow candles are inside candles, if you guys see that on here. So we're coming back down. We could go ahead. I have different alerts set up for different levels that I'm watching. Was going to take a bike ride, so I always love to have my levels set up because I get the alerts with TradingView, which rock and roll. Hey, Bad Scientist. How much volume is it? Asif, you know what? I didn't look really too much. I was just curious to see, because many times the middle of the day, they're going to go ahead and they are going to place that move. You can see, hey, look, right here, we came down. Up here, just kidding. We're going to go ahead and fake out those shorts. We're going to go ahead and squeeze them, and then we could potentially sell to them, which is why I also like to look at the 45-minute chart. I know it's a bit confusing with all these orange lines. I really wish they could make them so that they would just sort of blend into the background, or you could turn off the color. So this, we have the 20 simple moving average is the orange line here, and the 21 EMA. The 21 EMA will tend to show me the trend of where we're going. Yes, we came down. The shorts started to go ahead and kick in this morning, made some nice profits. And then the shorts, if they stayed in, were squeezed. They were looking potentially for that second day movement. We had that bear trap from close yesterday. They brought it back up to only go ahead and bring it back down, right, for today. So we do have that big level of 300, which on the daily is going to be right there at the 200 simple moving average, a very strong average if you guys are new to trading. Asif, just wondering if the market is crashing. Right now, Asif, we are, oh, we just hit a level. Look at that. All right, we just crossed down a fib level. So right now, we're just pretty much in a correction right at the moment, right? Is it going to be a crash? Well, if we go ahead and we go below this level right here, I want you guys to go ahead and set up alerts on your charts for if we go below that 278.50 area. If we start to go below there, you can see we did have these 3 weeks of volume right there. Now, many times when we do see a market crash over the time, over history, they always take it up to another high to get more people to buy in, thinking that the market's going to continue up, and then they bring it back down. We also have this trend line from the bottom back here to another day further back, right over here. So we have this trend line, which I would also want to see that to hold. So obviously, if we've broken that 278.50 area, then we're definitely going to go ahead and have a bigger drop to the downside. And I wouldn't be surprised if we start to see it come back and then potentially test, right here, test this level of, it's not following me, the 272, after 272 on down to the top of this area right here of 263. So different waves and stair steps down. Just like today, we had an overnight swing potential to the long side, a dead cat bounce. So what do I mean by dead cat bounce? A lot of people are like, Jane, what's a dead cat bounce? So if you were to drop something, a ball or anything like that, so it drops and then it bounces and then it drops and then it bounces a little bit lower and then it bounces, drops, hits bottom again, bounces a little bit lower. So same thing, the dead cat bounces when you're shorting, you come down to that level and then it bounces up and then it goes back down. ASIF, you know what? It's all about following the dark pool for me, as well as really big levels being broken. And this is a big tell right here, right? This candlestick from yesterday, right here. This candlestick, oops, it's supposed to be an arrow. This candlestick from yesterday had super high volume. When was the last time that you saw that volume that high? Pretty much right back around here, maybe the 26th of March. Oh, that's a little bit higher, right here. Okay, the 27th of March. And that was at the tail end of everything that happened. Now let's scroll out even a little bit more. When we started to go down last time, we didn't really have that volume until we already had a bit of that dead cat bounce movement, right? You guys can see the lines there. Maybe right here, even on that 4th day, that big day down. And then again, it opened, bounced up a little bit, and then we came back down. You can see, I know it's hard with all these lines, and I apologize for you guys. I'll get rid of actually these red ones. I don't need the red and green ones here. Let's get rid of this. Bye-bye. And this one, bye-bye. It's a little bit slow with the, all right. So we came down, we hit all of these moving averages and we broke below them, right? And we came back and we tested down here. Ah, cancel. I don't know that. And now we're doing somewhat of the same pattern, right? Scroll down a little bit. What did we have happen last time? Because history does repeat itself. Let me move the chart over a little bit more because I think, no, you guys are good. You guys can see it. Okay, so we had this wave down and then a surge up and then a big gap down. Came to test the bottom of that gap and then a drop down further. Then a massive gap down, right? We hit this moving average right here. Let me see if I can get rid of that line. It will let me. ASIF, yes. Yesterday, I would be considering the drop down, right? So yesterday, we had that drop down happen right here. Let me move that. You guys can see that wedge. Delete that. Okay, so we had this sort of little island up here. It's running a little slow, guys. All right, so we had the island right here. Go to the upside. I'll put this up here. Okay, right here. So we had the island area right here. We have now dropped below it. If we go above the area of 312, we're going to have that gap to fill to the upside back up here to that 319 area. Right now, we're hanging out right here at that 200 simple moving average. And that 200 simple moving average is fairly strong. If we look back at the yesterday for the big volume, see if we can see the highest point at which the volume came in, right? So let's adjust it here. Pull it back out. Thank you. All right, so we had the highest volume at the end of day. Any surprise? Well, people were shorting it all day, right? They were shorting it all day. And as a result, went ahead and had people closing out their positions potentially for the end of the day. It was very far extended away from the moving averages. We just had a massive day down, lots of volume, and you can see all that volume came here. Now, if we go below yesterday's, then we could consider potentially that volume as selling volume because we're below all of that massive volume, right? And right now it's just sort of melting away. Another, you guys know I always look at Microsoft and Apple as well. So yesterday I was thinking, all right, well, Microsoft and Apple, they hit on their daily charts, they hit their 4 exponential moving averages and they bounced. For Apple, we came to the 8, then we bounced up. Now we're between the 4 and the 8 right here. And on Microsoft as well, I'll wait for it to roll over. Oh, we just got another alert. It should pop up and let me know what the alert was. So Microsoft, we actually went below the moving averages and you can see it's starting to curl over. So we have those averages that are starting to curl over. Are we going to go ahead and break down and break this trend line right here? Let's see if it will let me go ahead and set this up. Yeah, add alert on trend line. I want to know when we break that trend line. I want to see when this volume is going to step in. So we had a massive up day and then it pulled back. I'll just hit create. Pulled back here, bigger volume than the day prior. Today is not done. We're just halfway through the trading day. And the volume is about half of that. Now, for sure, in my opinion, if we break below the low here, we're going to start to see more volume come in and we're going to have potentially a gap fill down right over here, down to 184, a good $2 move. That is, if we break this area right here, which in my opinion, I think it would be a test for a little bit, and then we would come back down to that 184 area. Another one that I have been trading today is Facebook. Nice bounce today. We came up. You can see it's starting to curl over the averages. If you guys have ever studied like the moving average ribbon, many times you can see when it starts to curl over, then you start to have that downer effect. Yes, Asif, it did happen right after the Fed. That is true. And many times we see the prints coming in on the dark pool before it happens. And so we are prepared just after it happens. Hey, you know what? This is going to be what drives it. It's not really the Fed announcement. I know everybody wants to say, oh, this news came out and that's why. The reporters on the news stations are simply reporting. They're telling you after the fact what has happened. With the dark pool, we see the prints beforehand. We see these big prints and we're like, okay, guess what? We are below some big levels on certain stocks. Therefore, we're bearish on these stocks as long as we stay below these levels. So for today, we saw, this came up, it tested, and we have selling wicks here and selling wicks here. We're now below the 20 simple moving average. We haven't broken below the 21 EMA yet right here, and we could go down and potentially test that low. You can see that's my final target for today. 223.71 is going to be my final target for Facebook for the day, for potential sell-off into the end of the day if it does continue on down from here. Does anybody have any questions at all on the market or any stocks in particular that you want to look at? We also, you can see also the Russell, right? So the Russell usually is the strongest one for the market. excuse me, the weakest one. And again, this looks very similar to the SPY chart. We had that gap up, little island area here of everyone having fun. Yay, it's euphoric. Everyone's having a great time. The market's going to be bullish. You know, this bear, this is the 50-day longest run, best run ever of the market. Hey, convincing people to buy so others can sell, potentially the really big guys. And now we're below these levels. We're below the 21 EMA here. ASIF, it's right here, actually. I have it already right here. I have the list right here on the right. This is wrong. The last one on the list was air today. So you can see, you know, some that I generated on my list today didn't really, like this one doesn't really have too much of a trade. Yes, it came down. You could have bought, but you could have shorted it right here to the downside. Lulu had earnings yesterday. The market didn't like it, yet look at what happened. It filled that gap to the upside, and now it's pulling back down. That can happen if a stock gaps to the downside. It doesn't mean that it's necessarily going to be short right off the bat. You have to look at the big picture of what's going on with the stock. What happened throughout the day, right? So my area to watch for going ahead to go ahead and be bullish was above that 300 area. Well, it ended up opening up above there, tested it, and then went up and came up to the 200 simple moving average on the 5-minute chart, and it has yet to test that again. So that could have been, you can see 5, 10, 15, 20, 25 minutes where that goes ahead and that takes off and drops from there. And just out of curiosity, I'm going to see, oh, just above up here, ASIF is just the indexes. So above IWM and QQQ are just the indexes. All right, there we go. SPY is in meltdown mode potentially. So let's talk, I mean, we talked about different targets. So let's look at it again. If we can go ahead and break that 300 level, right? Let's go ahead and talk about potential strategy here, right? We do have our 50 simple moving average down here at 289. We might have a test down here, again, 299, this area. Pull up the price. If it goes ahead and we break the 200 simple moving average, maybe 299, maybe target down here, 297. We also have this moving average right here, 295, 294, on down to 290 area. So those might be some good areas to look for. And then we get into this consolidation box back here where we were just sort of going sideways for 3 weeks. Now, if we break that 294, which is the top of this box, then we could really see another test down here. If they were using that area to buy, they might be greedy and might want to go ahead and take it down to where they want to go ahead and buy it again. And then they're going to take it up even more. Much of the market is manipulated. Jim Cramer said it. Trump said it. Jim Cramer just tweeted about it this week saying, I can't believe all the games that are being played with the market right now. And when you look at the FOMC and the Fed and what happens, they do a lot of stimulating to the economy to prop it up. They did cut interest rates. What does that do? That's going to put more hands back into people in the economy so that they can go ahead and spend more money. When they are buying those federally backed securities, it's like me buying a car from you. What do you ultimately end up in your hands? I get the car and you have the cash, right? And you can go and spend that cash. When they're buying those federally backed securities, then they are putting cash back into the economy to go ahead and stimulate growth, right? So they can't drop the rates that much more because then we're going to start to get very close to negative interest rates. And so at the moment, they're not interested in negative interest rates, it seems. So they're just leaving it the same. So if you want my list, I do create this live every morning that the market is open on Ticker Tocker with my channel. And I also send it out as a newsletter as well every morning once I've gone ahead and finished it up. And I do have my trade ideas there as well. And if you guys want to go ahead and check out the dark pools and be prepared for moves like we had over the past 2 days, come and check us out at thedarkpools.com, especially in the training pit, where we will really help you learn to trade around the dark pools. When you have the edge of seeing what these really big guys are doing, you can go ahead and make some insane profits, like buying a $25 put and turning that into $500 in a day. Not always will it be like that, but sometimes it will be like that. When we have some massive moves like yesterday, the IV goes up because the fear indicator is going up, and then you have the IV going up on those options. So do you guys have any other questions? I can see we're testing 302 right now on the SPY. And I'm curious to see what Facebook is doing right now as well. Facebook is also coming down. It's still hovering around that 227 mark. Also Starbucks. You know, Starbucks did announce that they are closing 100 stores, I believe, yesterday. And today we went ahead and bounced up. And we're testing that 200 simple moving average. We went ahead and tested it and brought it down, and now there's some buying. We could have a potential doji day, and we could have a bearish doji sandwich right here. Anybody hungry? It's lunchtime. Or we could have a reversal from there and fill the gap to the upside. So definitely on watch for Starbucks and Facebook as well. If these majors are starting to get hit, I have no idea. Maybe this is also something that I find very attractive on the Facebook chart to watch. Let's go to a weekly right here. All right, so you can see right here on the weekly, past 3 weeks, where were we? We were hovering at a bottom roughly of 222. We had this bounce up right here. So we have 222 down to 215 area. So we have a nice $7 drop. If we can break that 222 area, we might take it to that. You can see we're hitting the moving average right now, and we could come down and test this next week, potentially, if we break that 222 level. We could come down and see the 216 area. So definitely keep that on watch. Put that alert on your chart for if we break down below that 222 area with volume, we could be seeing a nice move to the end of it. All right, guys, I'm going to go ahead and cut it a little short today. I do have an appointment today, but if there are any other questions, I'd be happy to answer them. I know there's a little delay, so I'll give a little pause. And as always, guys, if you ever have any questions, you can go ahead and shoot me an email at jane@cjanetrade.com. And I'm always willing to help you guys. If you guys have questions about the dark pool, just shoot me a question. I will help you to the best of my ability. All right, have a great weekend. Be safe, everyone. And remember, try to respect the social distancing. It can help everybody around in your life. Thanks. Have a great one. Bye.
The risk of loss in trading commodity interests can be substantial. You should therefore carefully consider whether such trading is suitable for you in light of your financial condition, and considering whether to trade or to authorize someone else to trade for you. Past performance is not necessarily indicative of future results.